All right, we have, let's see, Thursday, the 23rd of April, about a quarter of 6 a.m. Pacific time. So the cash market opens about 45 minutes, and I'm not really a technical analysis guy, but a possible area of interest to me. It's probably going to be somewhere around in the eminis between, let's call it 75-ish. 71 is a handle, between 75 and 85. And I'm going to probably price out some short delta risk reversals up there. And before I take a peek at what's going on with that, as far as pricing that the structure that I mentioned, I want to take a quick look at the overall, see what's happening in these markets before pre-cash. So that's the peak that I wanted to take. Let's see what's going on with CAR. CAR is down 41 bucks. It was as high as at least 830 this week. So they have a bit of a squeeze going on there. They're just not going to have a lot of volume, so they're probably not going to make the cut for my most active list down here. And the reason is they just don't have enough outstanding shares. It's the shares are basically owned by
Update 1 UK investigates after big health dataset listed for sale on China's Alibaba.
For the shorts. They're getting pummeled. But anyway, let's take a peek at some of the short delta risk reversals that I might be interested in ES, the options in the minis. So let's see, today's Thursday. So I'm not, maybe Monday. Let's take a look at Tuesday to begin. So we are about 25, 35 handles away from an area of interest, but I'm going to use current prices to take a peek at how things look. So real quick, well, let's start with the call spreads. So to begin with, I'm probably going to want to go somewhere between 10 and 20 wide. So let me take a look at the, I'll start with a 10 wide and around the 20 delta. So I'll just use the 20 delta. And let's do the 40-50 and the 72 handle. So this is 230-ish. Yes, about 220. 220. I'm going ask to ask on the price. So I can sell the 20 delta 10 wide for about 220. Now, in addition to that, let's see, the at the money straddle is currently about 100, a little less than 100. And the 20 delta on the call side is 90 higher than the at the money straddle, which is at 71.50 I'm going to use. And let's see where 90 gets me. So let's go out to the 60 and see how many delta we get there. So this is a 26 delta. But of course we have some skew to the downside here. So let me go to 20. So this is going to be 130 away on the downside. The 20 delta is 130 away on the downside. What's this 10 wide priced at? This is $1.40. So I can get a little closer. Let's look at the 50, and this is going to be $1.50-ish. And I'm not necessarily looking to put the trade on for credit. But let's see what I get. 60. Well, I can do the 60-40 for about 350, but let's look at the 60-50. We'll keep it 10 wide for now. So this is about $1.75, and this one's about $2. So I could put this on for a small credit, and what we have here is a bearish put spread, long put spread, and a bearish call spread. And I can put this on for a tiny credit, but maybe I can also do this. So let me go out to the 30, and I'm going to go to the 50. And this is 330. So put this on for a small debit. It's not too bad, but I'm not necessarily going to. I'm going to have to take a closer look at the specific IVs per strike, because I don't want to necessarily choose the most expensive one relative to the at the money IV on the put side. And I don't want to suggest that I'm nitpicking here, but I do want to measure it a little more precisely rather than simplify and look for something that's around even money on the overall structure. Just something to keep in mind. Let's do the 70.50. All right, so this is going to cost about 3.5. I'm selling the other one for about 220. So I'd roughly pay $1.30-ish on these, and cost-wise, let's call it $1.40 right now. So $1.40 is the multiplicand, and the multiplier is 50. So let's just say 1.5. This would cost $75 right now. That'd be the initial outlay. On the call side, we're selling the 40.50 in the 72 handle for about 220, 2.25. And on the put side, in this particular structure, I'm 20 wide rather than 10 wide as in the calls. 10 wide, I'm purchasing the 50.70. And this whole thing is going to be somewhere around $1.40, a little less than $1.50. So it's going to cost somewhere around $65, $70 to put this on. If there is a deeper retracement or a more extended retracement between now and Tuesday, then what I would be interested in is I could do a couple things with the call spread, which would decrease in price. I could just close it, or I could turn it into a butterfly or a condor. Depends. But simplest case is I can just close it and not worry about it. However, I did mention a butterfly or condor, and the purpose of that would be to be able to benefit from a reversal to a down move, maybe. And on the other side, I could do the same thing. I could turn this into a butterfly. So the way I would do that, I'm going to have to erase these legs. So I'm going to move to the downside. Let's say that I wanted to turn this into an equidistant condor. So I'd have to go 20 wide somewhere else. That and that. So there's a condor. Or I can convert it to a butterfly by selling the 50.30. Okay, so if well, I don't want to play around with prices too much, but it could end up ultimately looking something like that, or let's see, 20 wide. Let's say that I got it to there. And if I could make this wider, it would be better, because I would just be able to possibly be better, because I could extend the length of the profit tent. And in this case, the apex of the tent will be between 20 and 50. It would look something like, let's see. There we go. So it looks something like this. Okay, but if I were able to extend this out, let's go to 80. 70 is fine. And this one has to be at 90 if I'm going to be equidistant. So notice that the apex of the tent is now wider because I just extended. I extended the outer wings of the condor. So possibly something like this on the downside. Maybe. But anyway, this setup will start to interest me if prices in emini go a bit higher. We're about 25 handles away from the area that I mentioned, the area of interest. And again, I opened an account here on Tasty roughly about a month ago. And it's primarily going to be used for options on futures. Not exclusively. I'm willing to poke into some other areas, but primarily for that. It's just gonna, and mostly because it's just gonna be easier for me to monitor it by separating the category of trades this way, as opposed to having everything bunched together and IB, which is where I have a bunch of other stuff. All right, that's it for today. Hope that was helpful. Good luck trading.